Friends, welcome. In today's session, we'll continue our discussion on understanding Indian financial system. Some of the basic concepts we have discussed in your earlier class. Today, we'll be continuing with that. In between, if you have any query, you may feel free to ask. And in fact, if I recall, in the previous class, we were discussing about three important sectors of financial system, right? Like household sector and then what? Corporate sector, business sector, and one is government. And some of you were bringing that issue. Can we eliminate government sector? Okay, that means point is that whether it is possible, there can be only two sectors. One is household sector and government sector. Friends, you see, last session also we are taking that thing. Government plays a very important role. The many components of financial system, you see, many components. One major component is that, let us say, regulators. Regulators are a component of financial system or not? Can we run a financial system without any regulator? Can you answer? Is it possible that we will be having a good financial system, but there will not be any regulator? Will it be possible? What do you say?
No, sir.
No,
Impossible.
we need regulator. Okay, so regulator, their government, you see, plays a very important role managing these regulators. Okay, can you give me examples of some regulators, financial regulator? What comes to your mind? You have not yet studied that thing. We'll be learning that thing. But if you
SEBI, IRDI.
okay, SEBI is a regulator which takes care of the secondary market. Then any other? RBI is another our primary regulator. Okay, then
IRDI.
Yes. What else?
PFRD.
Yes. What else? So many regulators are there. So one by one, we'll be saying, you see, regulator plays an important role. Then one more thing. So government plays important role in the context of regulators, in the context of creating regulators. But you see, all the regulators that we're talking about, that also, those regulators are also created through a law. Is it not? Suppose we are talking about SEBI, there is a SEBI Act. Okay, so we are talking about RBI, there is an RBI Act. We are talking about IRDA, there is an IRDA Act for them. So in fact, these institutions are created by law. Is it not? Yes or no?
Yes, sir.
All of them are created by law. Okay, so that there also government plays a key role in framing laws and regulations. And these laws and regulations are also another component of financial system. Whether it is in India or in entire world financial market also think about. So there are laws and regulations. They also form a part of, they are also can be regarded as an important component of financial system. Okay, so therefore, there are many components, many sectors like this. So broadly, we are only classifying. To understand the concept, we are classifying into three components. One is corporate sector or business sector, household sector like you and me. Then our government. These are the three sectors. And the last class, what we are discussing, each sector has got their respective roles. Is it not? So we also, as the household sector, we also produce something. We do some job, we earn some money, we save some money, and we try to use that money and try to reward that money in the financial system. Is it not? So we also take part in ensuring that there is liquidity in the financial market because money flows through us. Right. Same also happens in corporates. They provide goods and services. They produce certain things which are useful to us. They produce many things which are useful to us. Is it not? So we consume that thing. We pay money to them. Right. So they are also performing their duties. We are performing our roles. They are performing their roles. Government also provides many services. There are specific services which are supposed to be performed by government alone. For example, let us say defense. Okay, and to some extent education, to some extent health. There are sectors like that where government plays a very important role. Government is performing its own role. And while playing their own individual roles, what we find, there will be inflow and outflow of money. Okay, and when this inflow and outflow of money is actually happening, there is a possibility of surplus, there is a possibility of deficit, and rarely will find there is a possibility of balancing situation. So they are quite normal. Okay, so some sectors there might be excess money, some sectors there will be shortage of. So if you are having a very good financial system, that system will ensure that money should flow from surplus sector to the deficit sector. Okay, if there is a surplus sector in one sector, we are saying we are finding there is more money, then money should come to other sectors. Okay, money should come to other sectors. Okay, that can be ensured by different means. Okay, for example, let us say tax system. Through taxation, those people who are having money, that money is flowing from them to government. Okay, Mr. Suresh, if you have any question, you may ask now. Any question you have, Suresh?
Sir, some students are facing problem in joining the class. Sir. They are messaging in official.
Just a minute. Just a minute. Give me 1 second, please. Well, friends, this is what we are discussing. There was little connectivity issue. We got disturbed, no issue. Now, friends, what we're discussing, there are three sectors. One is your household sector, one is government, and one is our business sector or corporate sector. Each sector plays different roles, and there is a possibility of surplus money, there is a possibility of deficit money, there is a possibility of balance situation also in all these sectors. So the objective of good financial system is to ensure that the money should keep on flowing from surplus sector to deficit sector. Okay, if that flows, then liquidity can be maintained in the system. So entire system is in fact directed to ensure that. So we are having these rules and regulations. We are having financial institutions. All these things takes care of ensuring that there is enough liquidity in the system and money should keep on flowing from different sectors. Well, friends, now let me share the screen with you. Previous class, we had discussed about various kinds of decisions which are taken in an investment, keeping in mind the risk and returns associated with that decision. And to understand this risk and return, we need to familiarize ourselves with the entire financial system. Then only we'll be able to understand what is the return I should expect and what is the risk I'm going to take for that return. Okay. And the return we have already understood, that means the value addition. And risk means the uncertainty. And if business manager as a finance manager collects money from financial market, uses it, then money, when it comes to him, it again returns back to the financial market. And also part of the money is retained by him so that he will be growing, his wealth will grow. And this financial market is a part of our financial system. This financial market operates within the financial system. And this financial market is regulated by various regulators who are also another component of financial system. And this financial market also need to follow certain rules and regulations, which is again one more component of the financial system. Okay, these are various components of the financial system. Now, having understood that, then this is what we are discussing, that how money can flow from one sector to another sector. Okay, money comes from government to household sector by several means. Okay, money goes from household sector to government also. Money goes from household sector to corporate sector also. Money also comes from corporate sector to household sector and to government. Like this, money keeps on flowing in various sectors. Okay, and we have understood there can be So one mechanism is that the direct indirect finance mechanism, that means through intermediaries, some intermediaries are involved in this flow of money. And there is also possibility that direct finance without intermediary also it is possible to ensure flow of money. Okay, now at this stage, we'll try to understand what is the role of financial system. We already know the financial system plays a significant role for economic development of any country. Nobody can deny that. If you want to have good economic development, we need to have a very good, foolproof financial system. Because through that system, money will be mobilized, funds will be mobilized, industrial sector, corporate sector will be getting money. They'll be producing goods and services, and that will help in ensuring economic growth, and ultimately it will ensure the development of the country. When countries develop, residents also get developed. So countries development as well as the residents development can happen through financial system, right? And this financial system also acts as a bridge between the people who are having surplus money and the people who are having deficit funds. Is it not? Suppose people are having surplus money. What they do, they give money, they park that money in the bank. It's a very simple system to talk about. Why they're parking money in the bank? Because they know they will be getting a return. And they know with that return, risk associated is less. Why risk associated is less? Because they have a trust on the banking system. They know the banking system is controlled like this. There is an authority which controls that. There is, let us say, Reserve Bank of India, there is Finance Ministry. All of them controls the banking system. Okay, when the banking system is controlled, people have faith in the banking system. They're ready to park their money in the banking system. And the same money is given to loan in some corporate sector. Corporate sector need money. Most of the time, corporate sector faces deficit. If you look at the capital structure of a company, most of the companies you'll find, if you look at the capital structure, you find it's a composition of both debt as well as equity. Okay, just have a look at balance sheet. Rarely you can find a company which is doing good business without any debt. So meaning debt is needed. Okay, debt is needed, and debt is also wise to take debt. It is also wise to take debt because that will reduce your cost of capital. But how can they take debt? So there should be some institution which should be ready to provide that. And these banks which collect money from household sector, that money is given to the corporate sector which can be used. So this is how the banking system, which is a part of financial system, acts as a bridge between the people who are having surplus fund and we are having deficit funds. Okay. And that money, you see, that money is better utilized. The money is better utilized. Suppose that same money with the household sector, the household sector may add, let us say, 8% rate of return. But when it is given to a different sector, that different sector may earn around 20%. So money is better utilized or not? What do you say? Do you feel money is utilized in a better way or not? When money is transformed from one sector to another sector, do you feel that it is utilized in a better way? What do you say?
Yes, sir.
Yes, definitely. Definitely, yes. Isn't it? Okay. Suppose you are parking money in a bank. You are ready to accept, let us say, 6% if you are keeping money in a fixed deposit. Why it is so? Because you know that if you will be using, you will be earning 6%. Maximum you will be able to earn a return of 6%. But when a corporate sector taking the same money, he is ready to pay interest even at 15%. Or maybe at 14%, 13%, they want to pay interest. Why they want to pay interest? Because they feel, even if I take it 13%, my cost of debt is 13%, but I can earn at 20%. Okay, so their ability to earn return is definitely better. Okay, the ability to earn return is better in case of business sector. So therefore, there is a need that money from one sector needs to transfer to another sector, and that particular role is nicely played by the financial system. And if you look at the financial system broadly, if you say very broad, it is a two-fold system. One component is the financial market, other component is financial institutions. Okay. And the efficient functioning of the financial system facilitates free flow of funds for productive activities. That should be there. Suppose one entity is producing something, one entity is producing goods and services. The money should be made available to that sector. So there should be free flow of funds for productive activities. But to ensure that fund is available in that sector, people should be encouraged to make investment. Okay, suppose we are talking about a company, let us say, company needs fund. How can it get fund? Either in the form of debt or in the form of equity. So if you're talking about equity, then what is required? That people should be ready to make investment in equity. People should be ready to know that in this company, this is the return, this is the expected return, and this is the risk, and we should make investment. Right? So then only fund will flow. So that thing happens. People believes in that financial system. People know, okay, let me invest money in that equity because I feel this is a listed company and its securities are regulated by SEBI. I know this thing, and this company is supposed to have good governance. So if I invest money in that sector, then the risk I'm taking is acceptable. It's within my tolerable limit, and return is promised by them in this month. A return expectation in this month, and risk is tolerable, so I can make investment. Meaning this investment activity is promoted by a good financial system. Since investment is promoted, that activity ensures free flow of funds from productive activities. Okay. So that's why this financial system provides intermediation between savers and investors. Savers are people who are having excess funds. Investors are the people who need funds to produce goods and services. And when this thing happens, so economic development happens at a faster rate. So all these things promotes faster economic development. Are you getting? Understood? Is it okay? Understood? Yes or no?
Yes, sir.
Okay, thank you. Now, we got an idea that the economic system of a country consists of people who are having surplus fund and people who are having deficit. Okay. The individuals who are having, let us say, deficit money, they have to arrange money, and people who are having surplus, they have to invest that money. So within that sector, if you see, within, let us say, household sector, there is also a link is needed between the people who are in need of money and who are having excess money. That link is also provided by the financial system. Okay, individually, suppose you want a vehicle loan, financial system provides you that. How it is possible? Because there are many people who have already parked money in the financial system, so that it can be used by the people who are needing it. Okay. Understood this? Right. Now, having understood this, today, one more thing we'll be learning. We'll try to define the financial system. Now we have understood various kinds of roles which are played by this financial system. We'll elaborate that role step by step. We'll see what are the functions that a financial system carries out. But today, at least, we'll try to arrive at a definition of the financial state, of a financial system. If you read here, it may be defined as a composition of different financial institutions, markets, regulators, financial transactions, analytic agencies, fund managers, etc. All of them. You may include many other things also. All of them forms a part of financial system. Okay, you can otherwise say it is a, in other words, you can say it's a common platform for borrowers as well as investors. It's a common platform for all these sectors. It's a common platform for the people who are having surplus fund and the people who are having deficit of funds. Not only people, for different sectors also. For corporates also, this is a common platform. Okay, understood up to this? Is it clear up to this? Yes or no?
Yes, sir.
Yes, sir.
Thank you. Now, one more thing. Now we have got fair idea about the financial system. We ourselves can define what is that. We can add more components to that, this financial system also. Now, just we'll try to classify that financial system in two categories. One is informal section of the financial sector and formal section of the financial sector. Once you have understood, you may find there are many activities, or can say many components which act in an informal way. For example, let us say there might be some money lenders, local people who deals like a banker, traders means shopkeepers, etc., who gives money on credit, gives supply goods on credit, landlords, who also form a part of financial system. That's also a part of, they form a part of informal section of financial system. Coming to formal section, you know, banks are there, stock exchanges are there, okay, non-banking financial companies are there. All of them form a part of formal sector. This is how we can classify the financial sector. And the entire the financial system performs various functions. Okay, and in detail we will be analyzing what are the various components of Indian financial system in detail. Just today at this stage, let us have this idea. This financial system consists of one, financial institutions, financial regulators, financial market, financial assets, financial services. Okay, and there might be different classifications. All of them, just you can have a look at this. What are this classification? So coming to financial institution, it might be banking institution, banking sector and non-banking sector. Two broad classification. Financial regulators are different. Maybe for banking sector, there is a regulator. For insurance sector, there is a regulator. Maybe for derivative market, there is one more regulator. For listed security, there is one more regulator, like this. Okay. Then financial market also can be organized, can be unorganized. Financial assets can be many. Let us say debts, like equity shares, preference shares, convertibles. Right. So like this, so many kinds of even fixed deposits, term loans, all of them are financial assets or financial instruments. And financial services, many services are there, like you say leasing, hire purchase, issue management, these are the services. But we can classify these services into some of the services that are fund based, that means when money is involved. Second is non-fund based or fee based, where money is not involved, but the services is provided for a fee, that is fee-based services. Okay, so like this, we can broadly classify the financial system. Okay, markets can be classified as capital market, money market. Coming to capital market, again, can be classified as secondary market and primary market. Okay, and banking institutions can also be classified like commercial banks, cooperative banks, the regional rural banks, foreign banks, private banks, public banks. Okay, so this is how a broad classification is possible. You may have a look at this chart. We'll be learning this thing in detail, maybe in the next session, but just have a look. You can see This is how financial system will look like. Are you getting it?
Yes, sir.
Okay. Now, next concept is that again we'll be analyzing these components, what we have learned. We'll be studying one by one what is the role of each component separately. Suppose we'll be learning what is financial institution in detail, what is financial market in detail, what are financial instruments, all these things, what are financial services, who are financial regulators. And then we'll be able to analyze or we'll be summarize that entirely when all these activities are done. What are the functions that can be performed by the financial system? How financial system ensures liquidity, saving, payment, risk, and policy aspects. How financial system plays a key role in all these things we'll be learning subsequently. Okay, so today we'll stop here. We'll catch up in our next class with all these concepts. Thank you very much.
Sir, can we conduct our class in Google Meet?
Just a minute. You